one of the key factors globally that seems to be racing ahead along with what is happening elsewhere apart from the equity markets is definitely the crude oil prices, Srishti. That one is at November high.
Surge to that $97 per barrel mark. And with this, let's quickly take it across to our colleague Soumeet, who is joining us in the studio to tell us that what this $97 per barrel mark mean for India, and with respect to that, which companies are in focus.
Well, for India, it is a negative development given the fact that we import nearly 85% of our crude requirement, and every $10 per barrel rise in average Indian crude oil basket prices inflates the current account deficit by around 14 to 15 billion US dollars. That is close to 0.4% of the GDP, and it also increases the retail and the wholesale inflation by around 50 to 60 basis points. That is for the retail inflation, and wholesale inflation by around 125 to 135 basis points. But there are a host of Indian companies that are dependent on crude, because crude is one of the raw material. Crude or crude derivative is one of the raw material, and a rise in crude oil prices does impact the margins as well. To start off with, it's the oil marketing companies that are the majorly get impact because of rise in crude oil prices, and that is because the marketing margin gets impacted very badly. In fact, the gross marketing margin, if you see that the oil marketing companies were earning on petrol in the June ended quarter, stood at close to 13.7 rupees. That has come down now to 1.7 rupees because of the rise in crude oil prices, and on diesel they're in fact losing money. They're losing 6 rupees every liter on every liter of diesel that they're selling in the market, as against a 9 rupees that they were earning in the June ended quarter. Apart from this, there are oil explorers. They generally tend to benefit because of higher crude oil prices, but given the fact that the government might go ahead and increase the windfall tax, the impact is expected to be largely neutral, and this will be neutral largely for ONGC, Oil India, Vedanta and HOEC. Ceylon Exploration is one of the another oil explorers which might stand to benefit because they are still not under the purview of windfall tax currently. Apart from that, there is paint, which has nearly 40% of the raw material cost related to crude oil. Aviation, fuel cost is one of the major costs for an airline company. Nearly 37 to 40% of the total cost is fuel cost, and a rise in crude oil prices, if not passed on to customers, will definitely impact the margins. Lubricant manufacturers, well, they manufacture lubricant through oil. Nearly 50% of the raw material is oil, and that will impact the margins. For tire companies, it's synthetic rubber, carbon black and other chemicals, which the prices of these are derived with crude oil prices, and with the rise in crude oil prices, the prices of these chemicals will also increase, but with a lag. For cement companies, nearly 40 to 50% of the total cost is either directly or indirectly related to crude, and increase in crude oil prices will definitely impact the margins. But currently, if you see, cement companies have gone ahead and taken a price hike, so the impact could largely be neutral for cement companies. Now, apart from this, there are a host of specialty chemical companies like Balaji Amines, Alkyl Amines, Camlin Fine, Clean Science, Rosario Biotech, Nosal, Aarti Industries, Deepak Nitrate. The key raw material costs for these chemical companies are also either crude or crude derivative, and a rise in crude oil prices with a lag effect will definitely impact the margins going ahead.
Right, Soumeet. So these are the companies that will have a negative impact on margins due to the rise in the crude oil prices, apart from us also bearing the brunt as retailers as well. But talking about, there are some pockets as well which will benefit, right? Like the downstream companies, they tend to benefit, isn't it? From
the upstream companies.
The upstream, I beg your pardon, yes, the upstream companies.
Well, yes, but if you see, the impact could largely be neutral for them, because government has been every 15 days increasing the windfall tax. So given the fact that crude oil prices have increased, government might go ahead and increase the windfall tax on production of crude. So for ONGC and Oil India, HOEC, Vedanta, they produce a large barrels of crude. Hence, the impact on them, on their realizations, in fact, would largely be neutral, because whatever extra they will be earning because of higher crude oil prices will actually be given to the government.
Right, all right. So that's the impact coming in for the higher crude oil prices for the companies, and given the fact that along with the higher crude prices, we are also seeing a depreciation in the rupee level as well. So that's like a double whammy when it comes to
whammy. In fact, for oil marketing companies, it could be triple whammy, because the Singapore gross refining margin, that is the other business, refining business, that has also been impacted, because we have seen a sharp drop when it comes to the Singapore gross refining margins. From $15 it has come down to now $6, I believe.
All right, so there are a lot of negatives actually when it comes to the rise in the crude oil prices in the market. Thank you so much, Soumeet, for putting that into context, because when you talk about crude, you only tend to think about OMCs or oil or rather ONGC or Reliance Industries, but you fail to even see the larger picture, because you have paint companies, specialty chemical companies as well, which use crude as a derivative or raw material. But let's pose a question to our experts then. What do you do with such sectors, given the fact that it is commodity driven? There is a lot of volatility that's happening in the commodity market. Whether should you bet in these companies, and if you've already betted on these companies, then what should you do? We have Mr. A.K Prabhakar joining us on the show, and along with that, we have Kunal Bothra as well. Very good morning to both of you all. And Mr. Prabhakar, let me come to you. You had Soumeet rightly outlined the companies which are likely to be impacted, given the fact that we've seen the sharp rise coming in the crude oil prices. What's your take? How should one look at this entire sector, or all the sectors that actually use crude as a derivative?
Morning. No, there are many companies which will be impacted. Even tire companies is one thing, I think he missed out, but they also will be impacted. But we need to understand, there are few companies which are likely to benefit in the long term. So ethanol mixing is something where, E20 policy is there. So, E12 is something, now we do it, 12% is a mixing. So there can be a chance that ethanol prices can be increased. So sugar companies which have ethanol capacity will be a major beneficiary. Balrampur Chini and Renuka Sugar has the highest capacity in ethanol. And even EID Parry has. So I think few sugar companies should benefit. Even Praj Industries could be one more beneficiary out of it.
Okay, so clearly the sugar companies are expected to benefit on the back of the rise in the ethanol consumption, and that's why because of the news flow that we are seeing in the sugar stocks, we are seeing continued up move in stocks like Balrampur Chini as well as Renuka Sugar. But Kunal, coming to you, very good morning first of all, and specifically on the charts, any stock that is making on your radar, because like Soumeet highlighted, all these OMCs have been reeling under pressure onto the charts as well. Even paint stocks today are under pressure, as well as tire stocks. So any counter that is on your radar, any call, trading call that's coming up?
Well, yeah, I think, so for example, Reliance looks very attractive. ONGC is something which looks very attractive from current levels. I think both these stocks have done reasonably well. On the Brent crude, I would probably expect that this is a breakout of sorts for the Brent crude on charts, because we've managed to hit a double bottom on the Brent crude. And I think that's where the breakout closer to that 88-90 mark was very, very crucial for this asset class. We could now be looking at possibly the Brent crude coming towards 99 to maybe even $100 per barrel, which is the next set of major resistance for this asset class. So in terms of a trend, this is a steady uptrend for crude oil, and it could probably trickle into these few larger cap names like Reliance, ONGC, etc.
All right, so it looks like this is a larger uptrend coming in for the crude oil prices, is what Kunal is saying, and also $99 per barrel cannot be ruled out. Also, approximately $100 per barrel. You all have a lot of global also brokerages that have raised their forecast actually for crude.
Yes, absolutely, and because of that, Kunal is liking stocks like Reliance and ONGC. So those are the calls that are coming up on the back of the rise in the crude oil prices. So do have a look at that.